Donald Trump actually just wants a recession. That's actually all he wants, to bring US interest rates and yields down so that US can repay its debt. A lot of people might think this is crazy because usually what Trump does is that he wants to pump the stock market, pump the crypto markets. A lot of the folks who are in crypto or in stocks believes that during the first term of Trump, he basically saw the stock market as his scoring card, right? It's like if he's in the NBA and he's going for like 10,000 points to become the GOAT of all time. And so they think that's what he's doing. And I fell for that trap as well. And I thought, okay, Trump is going to try to get the stock market to an all-time high. And now he cares even more about crypto because most of his net worth, believe it or not, is actually not in real estate anymore. It is in crypto now. So he's going to push crypto up even higher. There are some evidence to suggest that he wants that. But you know what? There's one market that he's watching even more than anything else. More than crypto, more than stocks, and that is the bond market. And I'll show you guys exactly why. And believe me, this absolutely affects crypto and stocks, and that is why crypto and stocks have been dumping, right? For people who don't know why this is happening, let me just show you guys this chart here. This is what Trump is coming into. This is 25, 26, right? 24, 25, 26, 27, 28. That's the year 2025. What we notice here, there's something like $7 trillion, right, to be financed. And there's $4 trillion. This is United States government debt to refinance in 2025, right? Most of this is actually due in the next 5 or 6 months or so. It's not the whole of 2025. So all up, 7 here, 4 trillion here. Trump's got about $11 trillion of financing he needs to find. And then there's another, say, 2.5 and 2. So in his 4 years, he needs to find about 15 trillion. $15 trillion. To put that in perspective, do you know how much that is? United States only makes about GDP $28 trillion and it collects taxes about $4.9 trillion, but it needs to finance debt of $15 trillion. That is why the markets are crashing. That is why the stock market is crashing, which leads to crypto crashing. For folks who don't believe this, I'm going to explain to you today how all of this works, and I'm going to give you evidence. I'm going to give you evidence of how Trump actually is focused on the bond market. So is Elon Musk. And that's why he's neglecting the stock market, letting it fall. It's probably good for him to bring the yields down. And when the stocks fall, as we have seen, crypto and Bitcoin tanks and altcoins crash. That's why. But before we get onto there, that's the answer to the question of which crypto exchange does Pablo Jimenez use? Well, Pablo uses an exchange that is non-KYC, which means basically you don't need to show your ID. You don't need to show anything. So the exchange doesn't even know who you are. That means you stay totally private. Of course, Americans can use it, and that means the IRS can't see you, the tax office can't see you, the CIA, the FBI, nobody can see you. I like them so much, I've made a deal with them. Here's Pablo's competition to win a Tesla Model 3 or Rolex or Vision Pro, limited time only. We've only got another week left, limited time only, right? Only just by trading, you get to win all of this. So the link is in the description below. If you're watching on YouTube, the link is in the description below. But if you're watching it on some other platform, like say, for example, on on this one, then basically just go to my homepage. If you want to just go to my homepage, which is profile page, and it's in the link right there. Basically, the Stan link right there. But only on this link provided by Pablo, only on Pablo's link. Okay, let's get back to the problem that Donald Trump is facing. So the magic trick that Trump needs to pull is basically when $15 trillion become due in the next 4 years, and half of which, $7 trillion, is coming due in the next 5 or 6 months, he needs to refinance that into the years 2035, 36, 37, 38, into those 4 years. What does that mean? It basically means, hey buddy, you owe me, $70,000, and you say, hey, instead of paying you $70,000 now, can I refinance that from you? Can I borrow that from you again, and I'll pay you in the year 2035, 36, 37, 38, roughly 12 to 13, 14 years from now, right? That's a big trick. He's going to have to convince, right? He's going to have to convince a lot of people to do that with him. He's going to have to convince the Chinese. He's going to have to convince the Saudis. He's going to have to convince, the Japanese, the Germans, the Europeans. It's a big trick to pull off. I'll show you guys evidence of how this is, why I think this is definitely happening, even though a lot of people haven't clued onto it yet. Before we do that, let's have a look at where Bitcoin is. So Bitcoin right now is on a bounce. And for me, right, this 91.8K area is the neckline of this massive Head and Shoulders breakdown. My personal thinking is we're probably not going to confirm above this 91.K. I don't know when you're going to see this video. It's probably usually like half a day to 1 day after my Discord watches it. So I'm thinking some sort of wick above, or not even get there, and then we pull back and have one more test of below 80K. So one more test of in the 70s, basically because at this 78K area, you've got a lot of longs, people who went long here with their stop losses here. So chances are we get one more wick down, take out these longs, clean this up, this area, right? And then up we go. So overall, I think Bitcoin has at least should have at least one more leg up left. However, we're probably in the short term. There's a short term and there's a long term, right? In the short term, probably one more dip here, right? Take out the lows of this 78K. In the longer term, we're still looking good, in my opinion. This is, ever since Bitcoin went on this this run, we've basically had a higher high, higher low, higher high, higher low, higher high. Well, you want to include that higher high, higher low, higher high, higher low, higher high. Even if it goes to 73, 72K, higher low, and then probably one more push up. If we get really lucky, two more push-ups, right? So now for some evidence of why I think Trump kind of wants a recession. I'll clarify. He doesn't want a recession. He just wants bond yields to come down. And usually bond yields come down in tandem with a recession. He can't help it because he's facing a huge situation where he has to finance like $15 trillion US dollars of debt in the next 4 or 5 years, when the Chinese and the Japanese aren't even buying, and Japanese are huge American allies. So have a look at this chart. Okay, actually, let me just show you guys what Elon Musk said. So how do I know? I'm giving you guys proof that of why Trump just wants the interest rates to drop. This is today. This is today when Trump did his whole big 3-hour speech for State of the Union address. He literally said today interest rates took a big, beautiful drop, right? A big, beautiful drop. It is about time. In the near future, I want to do what hasn't been done in 24 years, which is balance the federal budget. Balance the federal budget, right? Listen to his own words exactly.
And today interest rates took a beautiful drop, big, beautiful drop. It's about time. And in the near future, I want to do what has not been done in 24 years. Balance the federal budget. We're going to balance it. And today interest...
Look at the applause. Look at how excited the Republican Party got when he said that. And look at Elon. Elon has been saying, this is Feb 13th, Doge is working, you see long-term treasury bills. He actually doesn't really understand economics. Elon, what you meant to say, Elon, is actually treasury bond yields are falling. So Elon's aiming for that as well with Doge. And all Americans benefit from low interest payments on mortgages, small business debt, credit cards, other loans, Here he is again saying, polls show that Doge is overwhelmingly popular. Right, this is Feb 25th. And that the government spending should be reduced by $1 trillion. Right, so what all of this means, what Trump and Elon are all trying to say is basically that they're just trying to get government spending down. They're trying to, DOGE, Department of Government Efficiency, is basically literally cutting, in their view, what are excess government jobs, government spending, get the government spending down, therefore balance the budget. The US right now, last year collected $4.9 trillion in taxes. That's called a 5 trillion, and spent something like 6.7 trillion. So it's overspent what it collected by about 1.7 to 1.8 trillion dollars, right? And that's what's causing the US to right now having to finance $7 trillion in just 1 year, which it doesn't have. It can't even pay itself right now. It has a shortfall of something like $2 trillion, and it has to pay back $7 trillion. Of course, it can't do that. So it has to re-borrow those $7 trillion, go to all the guys who it owes money, like China, Japan, Saudi Arabia, European Union, BlackRock, all those guys, JP Morgan, and say, hey guys, can I pay you? Can we, keep the interest running, and I'll repay you guys in 35, 36. And the reason why I say that Trump, if he has to, he would probably prefer a recession, is because, look at this. The blue line here is the US 10-year Treasury yield. So Trump is applauding for this yield to go down. But see how this blue line is highly correlated to this black line. This black line falls and blue line falls. Black line rises, blue line rises. Black line falls, blue line falls. And do you see how at these turning points, the black line moves earlier, moves before the blue line? What is this amazing black line? It's called the Citibank Economic Surprise Index, which basically just means that Citibank conducts a tally. Whenever US economic data comes out, sometimes it misses the forecast. It goes higher than expected, stronger than expected, or it goes weaker than expected. And as we just saw, there are more weaker results than there are stronger results. So it has been falling. And, in his first term, Trump really wanted the stock market to pump. And now we do believe in his second term, he wants the stock market and the crypto market to rocket up. That's what he wishes personally. But what actually happens is that he's got a bigger agenda. He's got a bigger objective. And that is the US government will just collapse if it cannot repay its debt in the next 4 or 5, 6 months. And so therefore he needs to refinance all of that. He basically cannot re-borrow that money, right? Which I just showed you guys this. He cannot re-borrow that money for the next 12, 13 years. That's roll the interest on that at 4.5, 4.3% interest rate, which is what it is at right now. He needs to get interest rates where it yields down to something like 3%, 2%. I'll show you guys. This is the US 10-year Treasury yield, right? Remember, he wants to borrow for the next interest rates for the next 12, 13 years. So this 10-year rate yield is the closest thing that we can compare to. I can show you guys the 12-year yield, but usually we just look at the 10-year yield. And would you rather, if you were Trump and the United States government, look at where it's been, would you rather borrow money at 5% interest rate, or just on Jan 10th when Trump came in was sworn into power, would you rather borrow at 4.8% for the next 12 years? That's a lot of interest to pay. Think of it as your credit card or mortgage. Or would you rather borrow at 3.9%? That's like almost that's 80 basis points lower. But what if, actually, don't put it on a log, put it on a regular chart. What if you can borrow here? What if you can borrow interest rates, right? At look at even 2020. Well, that was the COVID pandemic. 2021, right? 22 is when it really took off. But even 22 is at 2.9, 2.8%. That's a full 2% lower than 4.8%, right? In 2021, rates were something around 1.4%. So at 4.8%, you can borrow at that, or you can borrow at half that rate at 2.4%. When you borrow at 2.4%, you're paying back half as much interest as before. US paid something like $1.1 trillion in interest rates. Now imagine halving that. Imagine just paying back 550 billion. That's a major saving, right? And look at this. I'll show you guys something. The US actually, so the way you get interest rates down is because the market feels that inflations are going to be high, and that the Federal Reserve is going to cut interest rates. How do we create a situation where inflations are going to be high and the Federal Reserve cuts interest rates? Well, we create a situation where the US economy is weak. And that means the city economic index, surprise index, keeps on surprising us, keeps on falling and keeps on surprising us to the downside. Then the US 10-year yield will follow it down. So I don't think Trump intentionally wants a recession. I'm sure any president, any human being in this situation would want the best of both worlds, which is I want interest rates to be low, but I don't want a recession, which is not impossible, but it's very difficult to achieve. You're going to have to create an economy you're going to cut lots of government jobs, cut government spending, which means GDP goes down, which means GDP economy becomes weak. You're going to create a situation where the economy becomes weak, but at the same time, it's weak enough, but not a recession, not a crash. It's not likely. So I do think we get a recession sometime this year, second quarter, third quarter. I don't know. I'll update you guys as things go along. But it's the only hope we have is that if the Federal Reserve also starts cutting interest rates and starts to end QT and start QE, quantitative easing, money printing, whatever you want to call it, because the Federal Reserve, when they do QE, they're actually buying bonds. When they buy bonds, Treasury yields actually do fall. That actually solves Trump's problem. But right now, the Federal Reserve obviously don't want to do QE because they do that. Inflation takes off. So they don't really want to do that. The only saving grace that I can see where Trump can get out of this jam is, it's a low probability, but it could happen, is that when yields are falling, that's what Trump literally wants. He wants bond yields to fall, 10-year yield, 20-year yields to fall. When the yields are falling, then basically the refinancing cost to American businesses is lower, so that helps some businesses. And also the tech stocks, the NASDAQ, can actually sort of do well, probably, because the NASDAQ is valued on... the entire stock market is valued using the 10-year Treasury yield. The lower the yield, the higher the stock market price or market cap or valuation, especially the NASDAQ, because the tech stocks, they don't have a lot of earnings and cash flow. They're basically, trying to sell a narrative of some big futures earning in the future. So I wouldn't rule it out. I would say it's a small chance. I would say the much larger chance to me is that the way they're going right now, US gets into a recession this year. Okay, for all the Aussies out there, check out SwiftX. That's what Pablo uses. It's a good on-ramp and off-ramp, and the link is in the description below. Thank you for your time, guys. Catch you next episode.